Mr. Puri, I'll start with a very simple question, but a meaningful one, which is that what is your understanding of the new normal? We are using words like crisis, unprecedented crisis, panic, fear, and anxiety. How about we start the interview with not using the popular words, but with the word which we should focus on, opportunity?
Okay. Well, you see, you said it very aptly that we have to live in a new normal. I think the reality is that this whole problem is not going away so fast. So we've also got to run our businesses and carry on with life and economic activity in this new normal, taking all the safety precautions. Yes, whilst there are challenges in this current situation because of the impact on the economic activity, and certain sectors are very sharply impacted. But we do see a fair amount of opportunities also for us, particularly in our FMCG businesses. I think there's a lot of opportunity in the health, wellness, nutrition, hygiene space. Consumers are in these times going to look for trusted brands. So these are opportunities. I think there are possible opportunities that may emerge over time on account of the geopolitical situation also. We saw one example with a German shoemaker moving on to, setting or intending to set pace in our source from Agra rather. So there are going to be opportunities for sure. And it's for us to be watchful of it, to be agile, and make the best of the opportunities that best fits into our capabilities and strategies.
What is your take on the government package which has been announced? In the short term for economy like India, some would argue that India is a consumption-driven economy and very little has been done to stimulate the short term, but in the medium term things have been done. So long haul, yes, short haul, nothing.
Well, let me say that in terms of the the package that is required, if one was to look at it in order of priority, I would say one is that we need to reach out to the most vulnerable section of the society on priority. And that has, I think, happened right at the beginning, and it's continuing to do so. And it's very heartening to see a lot of civil society members and corporates also coming out in big way to support the most vulnerable sections of society, because this is a serious challenge for millions of people who earn their livelihood daily. I think that's most important. And we must all remember, that ultimately businesses do not flourish and thrive or succeed in societies that are under distress, or societies that will have some kind of tension. So I think it's in our interest also to support that. So I think that's the most important. The second is the whole issue about, I think the largest stimulus that can happen is actually getting back to work. And how do we adjust to the new normal? The longer we take to adjusting to the new normal, the bigger the amount of stress and the larger amount of resources will be required to pull it out. And I think to get back to the new normal and get back economic activity in the new normal, I think it's as a first step, government has certainly done its bit to tackle these issues of liquidity, and that is the first step. Yeah, we hope that going forward we will also see some measures to boost consumption. Some of the reforms that have been done, and I would say so for agriculture, I think these are things that have been spoken about in the past. And indeed, they can have a transformative impact on the agriculture sector over a period of time. But yes, those measures are not going to give impact immediately, but medium term they certainly augur well for the economy.
So at ITC, what has been your experience in terms of change of demand, impact of lockdown on FMCG and the tobacco stroke, the cigarette industry? Now that lockdown has got lifted, how much of your business and capacity is back on normal tracks?
Well, as far as FMCG is concerned, I think it's slowly getting back to normal demand levels. It does vary across categories. We are seeing certainly good demand for the staples piece. On the pieces that can be classified as discretionary, yes, there is some amount of stress there. But at an aggregate level, I would say that as far as foods and personal care is concerned, I think largely at an aggregate level, it is coming back to a reasonable level already. And over time, as capacities scale up and as distribution improves and logistics improves further, and the markets fully open up, I think there is opportunity to go up further. There are segments like education and stationery which have been severely impacted for the moment because the sessions of the schools has changed and the business is heavily indexed to the school sessions. But ultimately, people will have to get back to schools. People will have to go through the education. So I think I would say that's more a timing issue than anything else. On the other extreme, of course, we have hotels, which is very badly, very adversely impacted. And other than hotels, which are supporting quarantine facilities or dealing with helping some stranded guests, most of our hotels are not operational right now, and that's in line with the guidelines of the government. Then we have agriculture. Agriculture also is slowly getting back to normal. It's getting back to normal. This is again indexed to food consumption. Paper and paperboard, again indexed to consumption, but it's, I would say, somewhere a little bit still lagging because it will once the economy fully opens up, we will see hopefully more demand for paperboard and packaging coming.
Okay. Before we get into specifics of your business, I want to understand that you have a very deep understanding of the Indian consumer because of FMCG, tobacco, and the hotel business. How do you see, because of this crisis, the Indian consumer psyche will change? Will they go down? Will the patterns change? What are you observing and understanding so far as the initial trends are concerned?
See, one very... my belief is that the trends that were already active pre-COVID, some of those will get accentuated post-COVID. And examples include, for example, we had already become aware of the challenge of sustainability. Civil society was seeing the numerous amount of extreme weather events that we were facing over time. More events, more severe, longer duration. So we were experiencing the shortages of water in cities. So we had come to an understanding of it. I think post-COVID, and people have seen how nature has healed itself so fast. I think the civil society and consumers are going to demand from everybody and every enterprise demonstrated behavior that nourishes the environment. I think we have for the first time seen what the environment should be. That is one trend. The second is I do see consumers looking for trusted brands, consumers putting a lot of attention and resources behind sanitation, health, hygiene, nutrition, the trend towards naturals, the trend towards organics. I think these will accentuate. I see digital was an undercurrent earlier itself. It was on a fast trajectory. I think it is going to go up even more sharply. And digital is going to become an even greater piece of our lives, whether it is from management of a back-end supply chain or consumer engagement, or even consumers on their, on their day-to-day activities. Digital is going to be a very important development that will happen. And I do see also that neighborhood kirana is going to be in focus, and neighborhood kirana is going to get a lot of respect, considering that he was the person who was very critical in this difficult times. Of course, online transactions will, as things normalize, they will continue to grow because at least for some time, people may prefer to step out in a more limited sense, and people will then realize the convenience of online, and probably online will grow even more. So these are some of the trends I see.
Let me take the clock back 20 years ago. ITC was just a tobacco company and a hotel company. Then ITC moved into FMCG and they started diversifying big in the paper business. Today, as we speak, based on your FY19 numbers, about 50% of your sales is now coming from the non-cigarette business. 5 years, if I have to take the clock forward, how exactly do you think things will change for ITC? Because ITC is known to be a tobacco company which has a presence in FMCG in the hotel business. When will we start saying that ITC is a cigarette and a FMCG and a hotel company?
See, 10 years back, it was 60% tobacco and 40% non-tobacco. Today, it's actually the other way around. It's about 60. If you look at it from a net turnover basis, it is 60 non-tobacco. It is not that we are shrinking tobacco. It is just that the investments today we are making, and that's where the headroom for growth is much higher in our other segments. So we expect other segments to grow much faster. And certainly the figure will go more and more in favor of our non-tobacco businesses. Today, 80% of my capital employed is in non-tobacco businesses. 90% of my employees are not in non-tobacco businesses. That reflects the kind of investments we are making in the non-tobacco segments. And all these segments that we are in, I believe there is huge headroom to grow, notwithstanding that there are certain challenges in the short term, particularly with respect to the hospitality segment. But going forward, I think once we are over this difficult phase, even that segment offers opportunities, because there is a lot of, for example, outbound tourism from India. I suspect as a trend, there will be even greater focus for inbound tourism. People will get to experience the beauty of India and what it has to offer, even more than they have focused upon in the past. And our approach in hotels so far has been that we were kind of building a footprint, which is largely done. There are some projects that are work in progress. And our focus right now is on an asset right strategy. And given the positioning we have, I think we will be able to expand our footprint quite a lot even in that segment, besides FMCG over a period of time.
What is your outlook on the tobacco business? Because concerns clearly are there about the growth or the volume growth, and now the impact of the lockdown in terms of a behavioral pattern. How do you envisage the tobacco or the cigarette business?
See, as I have said in the past, I think the biggest challenge that the tobacco segment faces in India is that of the threat of the illegal segment. Now, 1 in 4 cigarettes in India is an illicit cigarette. And as taxes have been rising, the illicit industry has been rising. If you go back some time, over a period of 5-6 years, the taxes on cigarettes tripled. And at a CAGR level, the revenue, the tax rate grew at about over 15%, whereas the revenue growth was between 4 and 5%. If you go to a period where there was stability in the year 1890, actually revenues grew at about 9%, because the legal industry was able to claw back over a period of time. So I see that as the biggest challenge as far as the cigarette industry is concerned. And I think this data point that is available that will hopefully convince and will be taken on board, and we will see a more if we see stability in the tax regime. I think the industry can recover, because there is a huge amount of illegal in the country, and FICCI estimates that the revenue loss on account of that is 13,000 crores. Even the farmers lose a lot, because the smuggled cigarettes or illicit cigarettes do not actually use the tobacco that is made in India. And Indian manufacturers also lose. So it's actually nobody gains in the process. So this, to my mind, is the biggest challenge that the industry faces.
If I look at the valuation of FMCG stocks in India, compare them with ITC valuations, looking at the kind of cash which you generate. Where is the missing link? Why is that markets are not realizing the potential of a true franchise like ITC, which is a cash generating machine, and yet the P multiples are so smashed down?
Well, I wish I had an answer. I do believe that the P multiples are much lower than what they should be. I do understand that, I do hear that there are concerns from a perspective on, taxation. There are anxieties on that respect, and every time an event comes which could potentially change tax, the anxiety kind of develops. There have also been some pressures on account of views on ESG and so on and so forth. But what I would like to say, yes, I agree, is certainly that I think investors should look at the free cash flows that the company is generating, and look at, I would say performance has been quite resilient despite a very difficult period in the last 5-6 years. And I say very difficult because it's not just, it's been the challenges with respect to taxation, where taxation has more than tripled in the last few years. But we've also been part of the larger macro ecosystem, and we have been impacted with that. So there have been many events that we have gone through besides taxation. And yet performance has, I think, held on a steady basis, continued to improve in periods of stability. We actually went into double-digit bottom line growth. So I think we have demonstrated resilience. We have free cash flows, given the fact that a lot of our investments in new businesses, I think this current phase is coming to, is kind of getting concluded. And because we were building the foundation, the incremental investments in future will not be as much. So we've also, therefore, the board has also taken a view on the dividend distribution policy. So the dividends are also going to be, we've said, between 80 and 85%. So from a dividend yield perspective also, it's a big positive. FMCG segment, which is a segment which typically, draws a very high multiples in India. Now, we've got scale there. What people argue is on the bottom line. But we must keep in mind that our bottom line includes the cost of gestation of brand building, and within our portfolio, we have many small and nascent businesses which we are incubating for the future. And we have taken a view, particularly from a foods perspective, that we wish to put in place world-class infrastructure, which will ensure that our product safety, hygiene standards are top of the line. And we have invested to some degree ahead of time there, and it provides an enormous headroom to grow. And secondly is the manner in which we have invested. We have also created structural advantages in the supply chain, because foods is a very freight intensive business. So it's about proximity to the markets, it's about freshness, it's about reducing layers in the distribution chain so that our cost of distribution reduces. And as our relatively older businesses are becoming bigger, you are seeing the impact on our bottom line. Right? We have increased between 17 and 19 by 2.6 times. And if you look at this year also, YTD, EBITDA has moved by nearly 2 percentage points. And I also would like you to, keep at the back of the mind, if you look at all other businesses which are older for us, we have demonstrated capability to provide best-in-class profitability, or at least in some businesses, aligned with the best in the industry. So we have demonstrated that, but in many of these businesses, you will also notice that we have built it patiently. We have built the foundation and then got the results. And it's the same process here, because we are here for the long term. We are here to build a large economic engine for ITC. And over time, I'm sure the results will be more than visible.
So how far are we away from really benefiting from the brand and the distribution reach of ITC? If I look at similar parallels which other FMCG companies have, those power brands are highly profitable. at least on return ratios, are much better than the FMCG business of ITC. I understand that in last couple of years, you had to build a business which was a fresh business, which was you have to create the brand, you have to invest in marketing, you have to invest in manufacturing. Do you think now next 3 years we will see automatic effects of that coming in the bottom line? How far are you away from industry averages now or industry benchmarks?
See, industry benchmarks will take some time, because in our portfolio itself, as I said, there are many businesses which are small and being incubated. If you look at the last 2-3 years itself, there are a number of new categories we have entered into. We've gone to frozen snacks, we've gone into floor cleaners, we've gone into coffee, we've gone into chocolates, we went into dairy beverages, we went into fresh dairy. So there are many segments that we have added to our portfolio. So each one of them will take some time to mature. And as you rightly said, the investments in brand building and gestating cost of capacity, which is ahead of demand, is certain thing that will have to be factored in. But businesses which we are relatively larger and which we started early in our journey are providing good financial metrics. And within 3 years, certainly the impact will be seen, because the way we are making progress, I don't see any reason why the trend will not be continued.
Okay.
Margin should be improving year on year for sure.
What stops the board then from dividing the company into two? The FMCG business and the tobacco business, won't that generate a lot of shareholder value?
Well, this is a topic that is raised often, but I think you have to really answer the question by simply looking at which situation is going to create greater value. Now, there are a few things that are advantageous when we are combined as an organization. One is that we are able to leverage a large and robust distribution highway and logistics highway. And these are all high cost elements in any company's operations. Splitting it will mean duplication of resources. Second, by the whole issue is that what is the value that you are creating out of synergy of being together? Right? You spoke about tobacco and FMCG. You could even argue about hotels and so on and so forth. But there's a lot of value that is created by our hotels business and foods business interacting very closely. The ITC MasterChef's frozen snacks that we launched, all the seasoning and the textures, etc., were recommended and tested by our chefs in the hotels. Now, we today believe that we are deriving far more value by being together than being separate. In fact, Michael Porter, about 2-3 years back when he was in India, he gave this the Porter Prize to us for corporate governance and integration. And integration piece is about how do you create synergy out of diversity, right? And I think that is something that has helped us, and it has helped us build brands. It has helped us come out with innovative solutions. We are able to cross-pollinate ideas from one business to the other. Some of the principles that we have used in our traditional businesses, we have used it, for example, in creating Ashirwad Atta, which is a market leader today. Right? And all this happens when people interact closely, have an opportunity to look at things together and debate it. So that's where cross-pollination of ideas comes. So it's really about how much of synergy you create. At some point of time in future, when these businesses, each one is completely mature, then again, this whole thing can be revisited. But in today's context, I believe we are creating a lot of value through synergy.
Now, a cigarette business is throwing up a lot of.
I'm really talking about the synergy that exists from a FMCG perspective, right? And the other businesses, of course, are already mature.
Okay. So let's understand the current cash flow of ITC. Tobacco business is the cash generating machine. FMCG, bulk of the expansion in terms of investments is over. Hotel, you are a large chain now, so you will not be expanding, and whatever cash is required is not going to be much. Paper also has reached a size, and you will still generate a lot of cash. So what happens to that cash? Would you be diversifying more into another vertical, or just keep on building your existing businesses more?
One is, as I said, because our investment requirements are going to be smaller going forward. So we have already announced that in our dividend policy that payout ratio will be much higher. As far as our portfolio of businesses is concerned, we believe that in today's hyper competitive world, it's very important for any company to play to its strengths. And the portfolio that we have today, I think is a portfolio where our capabilities and institutional strengths are really leveraged well. And this portfolio aligns well with the opportunities in the marketplace. Whether it's FMCG, whether it's agriculture, whether it's paperboard and packaging, and over a period of time, even hotels. So all these businesses have got huge headroom to grow. And we will be investing to strengthen and grow these businesses. Of course, in hotels, we are really moving to an asset-right model. So that will entail, after we finish the current projects in the pipeline, much lower level of investment. It is more working with other hotel owners and helping them run their operations with the portfolio of the brands that ITC has got, right? So that's what the focus will be. We're going to really focus on these verticals. There is huge room to grow there. And we have a very huge aspiration in FMCG. And first step is that we've got into a number of categories in the recent past. We're going to scale up these categories, make them market leaders. And once these categories scale up, we will explore other areas, because we want to make the FMCG space really big, because I believe there is a huge headroom to grow. And we have, the institutional capabilities. If you look at a foods business, the strength of agriculture, the strength of cuisine, the strength of distribution, the strength of R&D, the strength of packaging innovation. We have all the elements together. And that's where we will focus and really make it much larger.
So and I don't want to get this one wrong, Mr. Puri, but if I make a comment based on our interaction today, that somewhere in 3 to 5 years, the FMCG business in turnover could be higher than your tobacco business, I will not be off the mark.
Well, that I do not know, but all I can say is that our non-FMCG, non-tobacco businesses will grow at a much higher rate. You see, there is a base effect also that you must factor in. There's a base effect, but the rate of growth in the non-tobacco segment will certainly be much faster.
Okay, I'm just going to talk about the ITC legacy, Mr. Puri. From Mr. Chuk to Mr. Deveshwar and now Sanjiv Puri. Every time with the change of leadership at ITC, the business of ITC has also evolved and morphed the market and with the need of the Indian consumer. What is on your priority list? You mentioned growing the non-FMCG business. You mentioned that you want to, make ITC, more profitable, higher dividend yield. What would be what do you think would be the hallmark of Sanjiv Puri's era for ITC?
Well, I think if you look at what ITC stands for, ITC's credo is nation first, sab saath bade. So I would like to live this philosophy in whatever business we do, and that is the DNA of the company. I was very happy to hear the Honorable Prime Minister speaking about self-reliance, and then the Finance Minister also clarified that it is not about isolation, but it is about a more stronger, resilient India. That's the philosophy with which we have always operated, and that is manifest in our investments in trying to create world-class Indian brands that are created in India, capture value in India, and retain a larger share of the value, and hopefully over a period of time, go out and bring back value into India. And each of these brands, what is very important for us, must anchor a value chain in the nation. So if you look at Ashirwad Atta, you have the wheat value chain behind it. And for us, it's not just about procurement, it's also about working with the millions of farmers, so their productivity and quality, and therefore their realizations improve. When we started juices, we a lot of juices are made out of concentrates that are bought from various parts of the world. We said that if we have to create value and live to our credo of nation first, I must be using fruits from India. So our is the only brand that uses only 100% Indian fruits. You look at the example of agarbatti. We import a lot of these bamboo sticks. Now it's India cannot be strong if all these things are going to be imported, because a lot of livelihoods are created out in the farm fields, agroforestry and agriculture, as compared to simply in the factory. So 2 years back, so this is the third year in the running, we started the work with the government of certain governments, and have started the plantation of the varietal of bamboo that is required for agarbatti sticks. Next year we'll be harvesting the first crop, right? So this is to us this is to us the way we should be conducting business, so that we are contributing to building inclusive value chains, contributing to create livelihoods. Our businesses support about 6 million livelihoods today. Each opal empowers 4 million farmers. I think that is what ITC stands for. That is what ITC would like to be remembered for. And as an employee of ITC, that is what I would like to be remembered for. That is most important for us, is the philosophy and the manner in which we conduct our business. There could be some opportunities in adjacent businesses and so on and so forth. But that is separate. I think what is core to us is this whole philosophy of being able to contribute to the society.
Okay, so closing comments. In this entire lockdown period, personally for you, what has been your toughest moment and what has been your happiest moment?
Well, the toughest moment was that when lockdown was announced and you suddenly find everything unsettled. And it took, at that moment, one could not imagine how we will realign and, manage in such a situation. So the happiest moment was the next day when we all realized that we can actually do it.
A wonderful point. Really appreciate your time. It's been so fantastic, interacting with you. The more I interact with you, the more I learn about you. You've given me this real fascinating example of the journey of ITC and how from juices to agarbatti, how ITC is really in so many products. Now it is really changing the orientation of manufacturing in India.
Thank you, Nikunj. It was a pleasure interacting with you.
Thank you very much, Mr. Puri, for your time.